Hello and welcome to Market Square, your go-to show for deep insights into businesses and economic trends. I'm Olaitan Adibayo, and today we're diving into some major financial and policy decisions shaping the nation. Stay tuned as we break down these developments. Welcome back to Market Square. Let's get straight into it. Dangote Refinery has reduced its ex-depot petroleum price from 890 naira to 825 naira per litre, effective February 27, 2025. This marks the second price reduction this year and the third in just 2 months. Clearly, Dangote is making moves. According to the management of Dangote Petroleum Refinery, this price slash is a strategic adjustment aimed at providing relief to Nigerians, especially during the Ramadan season. It also aligns with President Bola Ahmed Tinubu's economic recovery policy by easing the financial burden on citizens. With this reduction, Nigerians can now purchase petroleum from partners nationwide, including MRS, Aden, and Adova. According to this statement released, here's how the new pricing breaks down. At MRS holding stations, petrol will sell at 860 naira per litre in Lagos, 870 naira per litre in Southwest, 880 naira per litre in the North, and 890 naira in the South and Southeast. While at Adova Petroleum and 80 stations, prices will be at 865 naira per litre in Lagos, 875 naira per litre in Southwest, 885 naira per litre in North, and 895 naira per litre in the South and Southeast. This move by Dangote is not just about goodwill, it's about market dominance. In a deregulated economy, competition is key, and lower prices attract more buyers. Dangote knows this, and most fuel marketers have been relying on imports. But why should imported fuel be more cheaper than locally refined products? That was the big question. Some marketers even raised questions about the high cost of Dangote fuel before. But now, Dangote is proving that his locally refined products can be cheaper than imports, and he has reduced prices 3 times to back up that claim. In a free market, no one can stop people from importing fuel. However, if locally refinery sells at lower prices, it naturally forces importers to slash down their prices too. Otherwise, people will simply buy the cheaper local products. This is already playing out as seen in the long queues at filling stations that stock Dangote's petroleum. Consumers will always go to the lower prices, and that's exactly what is happening. This forces importers to rethink their pricing strategy, because if they don't, they risk losing customers. Despite the landing cost of imported petroleum being high, some importers may still try to match Dangote's pricing, but it won't be easy. The fact that Dangote is slashing prices is a great news for Nigerian petroleum users. This is exactly what we need: real competition. If fuel subsidy is removed, but there is no price competition, then Nigerians will be stuck paying high prices. But now, thanks to the regulation and competitive pricing, we are seeing the benefits of a free market in action. In a major development, the Nigerian National Petroleum Company Limited has also announced a reduction in pump price of premium motor spirit, commonly known as petroleum, to 860 naira per litre. This move further intensified the price war among oil marketers and independent petroleum dealers. The new NNPC petroleum price, which takes effect on Monday, marks a significant drop from the previous average of 945 naira per litre. This decision is largely influenced by fluctuation in global crude oil prices, making locally refined more competitive. This move signals that Nigeria's oil market is undergoing a significant shift where competition is now actively driving down fuel prices. With Dangote Refinery and Port Harcourt Refinery functioning, the argument that Nigeria needs to keep importing petroleum products no longer holds weight. Many claim that local refineries couldn't meet demand, but Dangote has now proven otherwise. He has stated that the refinery has enough products to meet Nigerian needs and even export abroad. This price war will continue to drive costs down, and Nigerians are the ones benefiting the most. Some industry players have also admitted that Dangote's price slash are discouraging fuel importation, and many importers may soon have to shift to sourcing products locally. With the naira gaining strength against the dollar, the landing cost of petroleum will reduce, and since Dangote buys crude oil in dollars, its cost will also decrease. That means we could even see lower prices in the future. As Nigerians celebrate this price slash, fuel importers are feeling the heat. Many are already struggling to remain competitive as Dangote price slash makes importation less attractive. Recently, the landing cost of PMS was around 927 naira per litre, which is actually higher than Dangote's ex-depot prices. Importers admit that they've been selling with little to no profit margin just to stay afloat. But as Dangote continues to lower prices, the pressure on importers will only increase. At the end of the day, this competition is exactly what Nigerians need. The more local refinery push prices down, the less dependence there will be on imported fuel. If this trend continues, free prices could become even more affordable, and that's the ultimate goal. Nigeria's fuel market is changing fast, and for the first time in a long while, it's moving in the right direction. As competition in the fuel market intensifies with Dangote's latest price slash, another critical sector, Nigeria's financial system, is also undergoing significant developments. The Central Bank of Nigeria has reaffirmed its commitment to ensure a transparent and resilient financial system by reinforcing regulatory compliance and risk management across financial institutions. At a recent high-level mandatory compliance and anti-money laundering training workshop, financial experts stressed the need for strict adherence to global banking standards to maintain confidence in the sector. They also highlighted the importance of risk-based anti-money laundering and counter-financing and terrorism programs, emphasizing that financial institutions must stay ahead of evolving threats by adopting a proactive regulatory strategies and innovating compliance solutions. The workshop brought together compliance officers, trade operations specialists, and correspondent banking teams to discuss emerging financial risks, regulatory expectations, and strategies for strengthening banking relationships. Key discussion revolved around the role of strong governance frameworks, the necessity of know your customer, know your business, and know your transaction protocols, and the dangers of illicit financial activities, which sees trillions of dollars flow through the global financial system annually. Experts at the event warned that without enhanced due diligence measures, technology-driven risk assessment, and improved transaction transparencies, financial institutions will struggle to maintain credibility in an increasingly complex environment. One of the key effects of this compliance drive is increased financial stability. By enforcing stricter regulations, the CBN is helping to build trust in Nigeria's financial sector, making it more attractive to foreign investors and business partners. With a well-regulated system, Nigeria can reduce financial crimes, prevent corruption, and stabilize its economy. A secure and transparent banking system encourages long-term investment, leading to sustainable economic growth. Another major impact is the tightening of compliance standards for banks and financial institutions. Stricter know your customer, know your business, and know your transaction protocols. That financial institutions must conduct thorough customer verification, closely monitoring transactions, and improving governance frameworks. While these measures help in preventing illicit financial flows, increase operational costs for banks, which may result in high banking fees for customers in the short term. For financial institutions that do not comply with these new standards, the risks are high. Non-compliance could result in penalties, loss of business, partnerships, and reputational damage. Some smaller banks and fintech firms may find it challenging to bear the cost of implementing stricter compliance measures, leading to potential mergers, acquisition, or even closures. This regulatory shift is expected to reshape the banking industry, ensuring that not only institutions committed to transparency and accountability thrive. While there are short-term challenges, the long-term benefits of CBN's compliance drive far outweigh the cost. A well-regulated banking system will lead to stronger financial institutions, increased investor confidence, reduced financial crimes, and a more competitive banking industries. Nigerians will ultimately benefit from improved banking system, a stable financial system, and an economy that attracts global investments. This initiative also aligns with CBN's broader vision of regulatory excellence, ensuring that Nigeria's financial system remains strong, competitive, and globally compliant. A robust banking system builds trust, and trust is the foundation of economic stability. By strengthening compliance and risk management framework, the CBN is not just protecting the financial system, it's securing the economic future of Nigerians and reinforcing the country's position in the global financial landscape. And that's a wrap for today on Market Square. Thanks for tuning in. Join us next time for more deep dives into the forces shaping Nigeria's economic future. Until then, stay informed and keep thriving.